There is an emotion that has destroyed more wealth than any market crash in history. It's not greed, it's not fear. It's the quiet, persistent whisper that you are being left behind. This feeling, known as the fear of missing out or FOMO, is often dismissed as a social media problem for teenagers. But that is a dangerously naive misunderstanding. In the world of wealth and finance, FOMO is not a bug. It is a feature. It is a precision engineered psychological weapon deployed by financial systems to trigger irrational, emotional decisions that systematically transfer wealth from your pocket into theirs. It's the invisible force behind every speculative bubble, from the dot-com boom to the crypto mania of recent years. It's the reason smart, high earning professionals find themselves buying assets at the absolute peak of a frenzy only to panic sell at the bottom. This is not a personal failure. Your brain is running on ancient software. For our ancestors, being left out of the tribe, missing out on a new resource, was a death sentence. This deep seated survival instinct is now being exploited on a global scale. The financial world is an arena engineered to trigger this ancient panic, turning your own psychology against your financial future. This video is not another list of mindset tips. This is a documentary investigation into the mechanics of financial FOMO. We will dissect the behavioral psychology research that explains why this emotion is so powerful. We will expose the systems that profit from your fear of being left behind. And most importantly, we will reveal the specific, research backed mental models that the world's most successful investors use to remain rational when the rest of the world is losing its mind. By the end of this investigation, you won't just understand FOMO, you will be inoculated against it, capable of seeing the trap before it sprung and turning widespread panic into your personal financial advantage. To truly dismantle the power of FOMO, we first have to dissect it. We have to understand the raw biological machinery that it hijacks inside our own minds. This isn't a feeling you can simply think your way out of, because it originates in a part of the brain that is far older and more powerful than rational thought. It starts with a small almond shaped cluster of neurons called the amygdala. This is your brain's ancient alarm system. When our ancestors saw a predator or were cast out from the tribe, the amygdala fired, flooding the body with cortisol and adrenaline. It screamed one simple message: danger. Your survival is at risk. Today, when you see a news headline about a stock that has soared 1000% or hear a friend talk about their crypto gains, your amygdala doesn't see a financial chart. It interprets the signal as being left behind by the tribe, as missing out on a critical resource necessary for survival. The panic you feel is real and it is primal. But this ancient fear is then amplified by a powerful psychological trigger known as social proof. Humans are herd animals. For millennia, straying from the group was a death sentence. So we evolved a powerful cognitive shortcut. If everyone else is doing it, it must be the right thing to do. The financial world is a master at exploiting this. Every news report, every social media post, every conversation about a hot investment acts as a powerful social signal. It tells your brain, the herd is moving, you are being left behind. You must follow now. Think of the Dutch tulip mania in the 1630s. People weren't just buying tulip bulbs because they believed in their intrinsic value. They were buying them because they saw their neighbors, their friends, and ordinary people becoming inexplicably wealthy overnight. The logical part of their brain might have questioned it, but the overwhelming social proof created an unbearable pressure to conform. The fear of being the only person in the city who didn't get rich was more powerful than any financial analysis. This combination of primal fear and social pressure is then locked in place by a neurochemical, dopamine. Dopamine is often called the reward chemical, but that's not quite right. It's the chemical of anticipation. It's released not when you get a reward, but when you expect you might get one. When you see a stock chart going up, your brain releases a hit of dopamine. It creates a craving, a powerful urge to act driven by the possibility of a massive gain. This creates an addictive loop. You see others winning, you get a hit of dopamine, you feel the urge to buy, and the cycle repeats. Financial markets, with their 24/7 news cycles and constantly flashing green and red numbers, are the perfect environment to weaponize this dopamine loop against you. So, this is the anatomy of the trap, a primal survival instinct amplified by a powerful social trigger and made addictive by our own brain chemistry. It's not a character flaw, it's a feature of your human biology. And this psychological trap is not a recent invention. It is a recurring pattern, a ghost in the machine of human history that has surfaced time and time again to create spectacular bubbles and devastating crashes. The assets change, the technology evolves, but the script remains exactly the same. Let's travel back to London in 1720. The South Sea Company, a British joint stock company, was granted a monopoly on trade with South America. The narrative sold to the public was one of infinite riches, of gold and silver flowing back to England, making every shareholder fabulously wealthy. This wasn't just a startup, it was backed by the British government itself, lending it an almost unassailable air of legitimacy. What happened next was a textbook case of social proof hijacking an entire nation. The stock price began to climb. First slowly, then exponentially. Stories spread of ordinary people, servants, merchants, farmers becoming wealthy overnight. The social pressure became immense. To not own South Sea stock was to be a fool, to be left behind as your neighbors ascended into the aristocracy. Even one of the greatest scientific minds in history, Sir Isaac Newton, was swept up in the frenzy. He invested, sold for a handsome profit, but then, unable to bear watching his friends make even more money, he jumped back in at the absolute peak. The amygdala was screaming, "You're missing out on the resource that guarantees survival and status." The dopamine loop was in full effect, with every tick up of the stock price delivering a hit of anticipation for even greater rewards. Rational analysis was abandoned. When the bubble inevitably burst, fortunes were wiped out. Newton himself lost the equivalent of millions of dollars, leading him to famously remark, "I can calculate the motion of heavenly bodies, but not the madness of the people." He wasn't just talking about madness, he was describing the overwhelming force of financial FOMO. Now, let's fast forward 280 years to the late 1990s. The asset wasn't a trading monopoly, it was the internet. The dot-com bubble was fueled by a powerful new narrative, the new economy. The story was that the internet had changed the rules of business forever. Profits didn't matter, revenues didn't matter. All that mattered was growth, eyeballs, and having a .com at the end of your company's name. The social proof was overwhelming and broadcast globally. Every day, the news media celebrated teenage tech founders becoming paper billionaires. Your colleagues at work were quitting their jobs to join startups. Your taxi driver was giving you stock tips on a company called pets.com. The fear of being left behind wasn't just about money, it was about being left behind in an old, obsolete world while the rest of the herd stampeded into the digital future. Investment banks, the architects of this new system, poured fuel on the fire. They underwrote initial public offerings for companies with no viable business plans, knowing that a public consumed by FOMO would buy them at any price. They created a perfectly engineered feedback loop. The media sold the story, the public bought the stock, the price went up, which created more stories, which created more FOMO. It was the South Sea bubble all over again, but this time it was turbocharged by 24/7 financial news and the nascent power of the internet. When the crash came in 2000, over $5 trillion in market value evaporated. Companies that were once hailed as the future of the economy became worthless overnight. The pattern is undeniable. The Dutch Tulip Mania, the South Sea Bubble, the dot-com crash. The names and dates change, but the underlying mechanism is identical. A compelling new narrative creates a sense of urgency, widespread social proof makes participation feel mandatory, and the addictive rush of watching prices go up short circuits the rational brain. These historical events are not just interesting stories, they are a blueprint and a warning. Now, with that historical blueprint in mind, we can investigate how this exact same weapon is being deployed today, with more precision and on a larger scale than ever before. The architects of today's financial system have studied this history. They understand the blueprint. They know that the human brain, your brain, is the most profitable vulnerability on earth, and they have built a machine, a global 24/7 high frequency hype machine designed to trigger your financial FOMO with a precision and intensity that Sir Isaac Newton could never have imagined. This isn't a conspiracy, it's a business model, a brutally effective one. The core of this machine is the symbiotic relationship between financial media and Wall Street. Financial news channels don't exist to make you a better investor. They exist to sell advertising. And nothing sells advertising like a dramatic story. A market slowly grinding up 8% a year is boring. A single stock rocketing 500% in a month, a new crypto coin minting millionaires, an AI revolution that will change humanity forever. That is a story. Speculative bubbles are the best content the financial media could ever ask for. They create a constant stream of urgency. Every market tick is framed as a critical event. Experts are brought on to give bold, conflicting predictions, creating a sense of chaos that makes you feel like you need to act now before you miss the definitive move. They are not reporting on the game, they are active participants in it, profiting from the volatility and emotional churn they help create. Your anxiety is their business model. Your FOMO pays their bills. This media engine is then used to broadcast the single most important component of any bubble, the narrative. Every major financial mania is built on a simple, powerful, and emotionally resonant story. For the dot-com bubble, the narrative was the new economy. For the 2021 crypto boom, it was decentralized finance and the future of money. Today, it's the AI revolution. These narratives are weapons of mass distraction. They are designed to be so compelling, so world changing, that they encourage you to suspend all traditional forms of financial analysis. When you are told that you are investing in the very future of human civilization, asking about price to earnings ratios seems petty, almost foolish. The narrative shifts the conversation from, is this a good investment? To, do you want to be a part of the future or be left in the past? This framing isn't an invitation to invest, it's a psychological ultimatum. To reinforce this narrative, the hype machine weaponizes data, but not the data that matters, like profitability or cash flow. Instead, it elevates vanity metrics that tell a story of explosive growth. In the dot-com era, it was eyeballs and click-through rates. In the era of social media stocks and speculative tech, it's daily active users or total addressable market. These numbers go up and to the right, creating a visually compelling chart that seems to confirm the narrative. It provides the illusion of rigorous analysis while completely ignoring the fundamental question of whether the underlying asset has any real, sustainable value. It's a sophisticated form of social proof dressed up in the language of a spreadsheet. And finally, this entire system is supercharged by a new class of participant, the financial influencer. In the 1700s, you had to rely on coffee shop gossip to know what your neighbor was investing in. Today, you are algorithmically served a curated feed of people, just like you, seemingly getting rich. These influencers, whether consciously or not, act as the final, most relatable trigger for FOMO. Their success feels attainable. Their lifestyle becomes the prize. They create a powerful conflict of interest where their financial incentive is not to provide sound advice but to keep the hype train moving, to get more people to buy the asset they are promoting, ensuring the bubble continues to inflate. This is the modern trap in its entirety. A 24/7 media cycle creating artificial urgency, a powerful narrative that short circuits rational thought, misleading data that provides a false sense of security, and a network of influencers who make it all feel personal and immediate. It is the South Sea bubble on steroids, aimed directly at the phone in your pocket. The system isn't broken, it's working exactly as designed. It's designed to make you feel that if you're not participating, you are losing. Now, we must turn from the system to the individual and examine the devastating financial consequences of falling into this perfectly laid trap. When an individual falls into this trap, the financial consequences are not just theoretical, they are catastrophic and they follow a brutally predictable pattern. The first casualty is always the long term plan. A carefully constructed strategy built on logic and personal goals is abandoned in a single emotional moment for a lottery ticket. The investor, driven by the fear of being left behind, liquidates sound, diversified assets to pour capital into a single speculative bet at the worst possible time, the peak of the hype cycle. This is the classic buy high mistake, but it's turbocharged by the intensity of FOMO. It's not just buying high, it's going all in at the absolute top, precisely when the risk is at its maximum and the potential for future reward is at its minimum. You are providing the exit liquidity for the early investors and the system architects who started the hype in the first place. What follows is the inevitable second act, the panic sell. When the narrative breaks and the price begins to fall, the same emotional brain that drove the purchase now triggers an even more powerful fear, the fear of total loss. The amygdala, once screaming about missing out, is now screaming about survival. The result is a panicked sale at or near the bottom, crystallizing a devastating loss. The investor has successfully executed the perfect wealth destroying maneuver: buy at the peak, sell at the trough. This isn't a market failure, it's the psychological trap executing its programming perfectly. The wealth doesn't just disappear, it is transferred from the emotional to the rational. But there is an alternative. A mental model so powerful it acts as a complete antidote to this entire system. It requires a fundamental shift in perspective, from seeing the market as a place of missed opportunities to seeing it as an arena of carefully laid traps. This is the joy of missing out, or JOMO. JOMO is not apathy, it is not ignorance. It is an active, strategic, and deeply satisfying decision to ignore the noise. It is the conscious choice to find pleasure not in chasing the herd, but in sticking to your own well reasoned plan. It is the quiet confidence that comes from knowing that the vast majority of once in a lifetime opportunities are, in fact, once in a cycle traps designed for the uninformed. The investor who cultivates JOMO feels a sense of relief, not anxiety, when a speculative asset soars without them. They see the mania not as a party they weren't invited to, but as a raging fire they are safe from. Their dopamine hit comes not from the thrill of a gamble, but from the steady, predictable compounding of their disciplined investments. They have flipped the script. They have rewired their brain to derive joy from the one thing the financial hype machine cannot tolerate: inaction. This mindset is the single greatest strategic advantage an investor can possess. In a world engineered to provoke emotional, irrational decisions, the ability to sit still, to do nothing, is a superpower. It allows you to preserve your capital during the manias so you can deploy it during the panics when the assets of real, enduring value go on sale. Warren Buffett famously said the stock market is a device for transferring money from the impatient to the patient. JOMO is the operating system of the patient investor. It is the shield that protects you from the madness of the people. Now let's move from the philosophy of JOMO to the practical, actionable strategies you can use to build this shield and make it a permanent part of your financial decision making. Building this shield against financial FOMO isn't a one time event, it's an ongoing practice of education and disciplined thinking. The financial hype machine never sleeps, and new narratives, new traps are always being designed. Staying immune requires a constant commitment to understanding the systems that are built to exploit you. This channel, the Millionaire Nomad, is your source for that education. Our entire mission is to pull back the curtain on the financial world. We conduct documentary investigations into the broken systems that trap the middle class. We dissect the behavioral psychology that separates the wealthy from everyone else, and we teach the specific math-based FIRE strategies that provide a real path to freedom. We don't share personal wealth stories or sell a lifestyle. We provide evidence, research, and data so you can build your own bulletproof financial plan based on first principles, not on hype. If you are ready to stop being a participant in their game and start designing your own, subscribe to the channel and click the notification bell. You will join a community of rational investors dedicated to building wealth the right way. In our next investigation, we expose the hidden architecture of the 401k system, revealing how it was designed not for your retirement but for Wall Street's profit. It's a system investigation you cannot afford to miss. Remember, the goal is not just to build wealth, it's to become immune to the forces that make others poor. It's to find the joy in missing out on the madness so you can participate in what truly matters: your own financial sovereignty.